It's Friday Coffee with your mortgage man, Eric. Here we go. And today, we're going to kind of recap what's going on here in the mortgage industry, right? With the latest COVID-19 craziness and the impact that the mortgage industry has had as a result of it, and the full forbearance issue, right? I mean, that's a talking point that's going on out there. So we're going to recap on that. We're going to talk about the latest news on forbearance, what's going on with it, with homeowners and making their mortgage payments. And we're going to follow up on the infamous Mark Calabria, the director of the FHFA, and the issues that he has created in the mortgage industry. And so we're going to talk about that and where we're at with those issues. So first off, forbearance, the wonderful word, probably one of the most intriguing words of 2020 in the mortgage side, right, of 2020. So forbearance, kind of recap, that was part of the CARES Act, which is part of the stimulus package that Congress and Senate passed last month in regards to COVID-19 and the crisis and helping people out and trying to keep the economy afloat while nobody's working. So they said you can miss part of the CARES Act. You can allow 6 months of payments to be in forbearance. Which basically means you're kicking the can down the road. And then at the end of 6 months, you can apply for a 6-month extension to forbearance, thus missing another 6 months of payments. And that loan is supposed to be deemed as current, as performing. We're finding at Calabria and the FHFA has some different viewpoints on those loans right now. So anyhow, back to forbearance and what's coming next. So here's what we know is that in Calabria, Fannie, Freddie, FHFA, they came out and they have given some guidance and some directive on this as what will happen at the end of forbearance when the consumer goes into repayment mode. That's been a hot topic and kind of a debatable topic. So here's what we do know. That the repayment mode is not talked about or covered within the stimulus package, the CARES Act. So right now as it sits, the consumer's not protected in that situation. So there's going to be a number of different things that are going to happen depending upon the consumer and who their servicer is. From Chase to Wells, to Nations, to Mr. Cooper, to B of A, to US Bank, to some of the smaller servicers, and on and on. Each servicer is probably going to have their own policy on how they are going to handle this. We already know it's a train wreck on how they're reporting to the credit bureaus. They're not supposed to be reporting anything in a negative manner, but we already know, we've seen some colleagues that have shared some credit reports with us that have shown that they're reporting a 1 times 30, a 2 times 30, which just sinks your credit scores, it destroys your credit, and they're not supposed to be doing that. So will there be some lawsuits? Will that get corrected? Hopefully that'll get corrected, okay? But in the repayment mode, we already are hearing that there's some banks, some servicers that are telling the customers that we're gonna allow you to go into a payment option. So it's kind of be like a loan mod. A modification to the loan. The old loan mods of back in the Great Recession, if you remember them, which is going to be better than having to come up with 7 months or 6 months or 12 months of payments all in one lump sum, like a forbearance agreement is written to the T, right? The definition of it. So look, that's good for the consumers that, we're talking about this now, and these servicers are going to be giving the consumers different options on the repayment structure. The problem is there's no set guidance, right? There's nothing in the CARES Act that says that these servicers have to do this. So keep that in mind. Maybe that gets changed, but right now, you could go into a loan mod, potentially. There could be a deferment option. So the 6 months or 4 months or 12 months or however many months of payments that you've missed due to the COVID-19 situation, they may just kick them to the back end. It kind of extend the loan, just kick them to the back end. That's called a deferment. So loan modification deferment, or they may stick to their guns and make you pay the lump sum. And if you don't, then negative things are going to start happening to the credit report and potentially having to foreclose on the home. Now, who knows what that's going to look like? Who knows if they will put this in a bill later on to protect the consumer? And the sad part of it is that when the politicians, congressmen, and senators wrote this bill, they didn't know of all the unintended consequences and the backdoor dealings, in depth into the weed situations that takes place. They didn't cover enough. And it's just, you just don't know what you don't know. So we're finding that out. I think we're finding a lot of things out with this whole COVID-19 thing as things progress. So that's the latest on the forbearance issue and the repayment structure that will come at some point. Now, moving on. Mark Calabria. This guy, man. I need to, I guess, be careful on what I say so this isn't deemed as hate speech and, gets taken off of YouTube, right? And all that stuff. Interesting. And so, Calabria is still not playing ball. And what I mean by that, kind of the recap. So the loan payment that goes into forbearance, the servicers still have to make your payments, right? We talked about this in previous videos. The servicers, even if you're not making those payments, the servicers still have to make up the payments in behalf of you to the final bondholder, the investors, the people that purchased that bond. So that has to happen. They got to make your property tax payments. They got to make the homeowner's insurance payments. Even though you're not making them, those payments still have to be made. So keep that in mind. So Ginnie Mae, who is FHA, they've come to the plate and they've opened it up and they are replenishing the servicers for FHA loans that are in forbearance. So things are working out pretty good right now with Ginnie Mae FHA. Not so much. Calabria is still fighting it. Calabria has come out a week or two ago and said, well, hey, once you guys get to 4 payments missed, we'll then pick up the tab. So now do the mathematics on that. If your portfolio of loans that you're servicing has 6, 8, 10, 12, 15% default rate, forbearance rate, you're talking about billions of dollars that you have to shell out that you won't be able to do. That Fannie Freddie could do, but Calabria won't do. So that's the issue right now, the match that is going back and forth, the tennis match, we'll call it that's going back and forth with Calabria and the MBA and the investors and the servicers. Calabria is not willing to give up. And people are like, well, why won't he give up? So there's the other side of the coin here. The other side of the coin is that Calabria, who is also the conservator of FHFA. What does that mean? So FHFA, Fannie Mae, Freddie Mac, as you know, were put under conservatorship back in the Great Recession because they had to be bailed out. Now, since then, right, they've paid back their monies to the Treasury over and over and over since then. But they're still, the Treasury, the federal government is still not allowing them to be pulled out of conservatorship and be placed back in the public market with an IPO, right, and the stocks go back to the public in that format. That's not happening. So, and there's been a call. Look, we all want that to happen, especially in my industry. We all want Fannie and Freddie to go back to a publicly traded companies, so you can purchase their stock. It makes sense. They're making a lot of money. This made sense years and years ago. So Calabria is protecting their reserves, which is about 242 billion in reserves that they have right now, and he wants to protect that. So he doesn't want to relinquish and help people out, consumers, servicers. He wants to hold that so they, Fannie, Freddie, look more solvent, liquid, in hopes that they do get sent back to the public market for trade and brought out of conservatorship. So he's kind of doing his duties, if you will, but he's not playing nice, right? I mean, we are in unprecedented times, obviously speaking, and he's just not willing to help out the servicers. He's since then has put a 5% or a 7% penalty. Now follow me on this. So if the loan has a first payment forbearance, so we close a loan, refinance, purchase, And before the consumer makes their first payment, it goes into forbearance, there is a penalty coming to the servicer for 5 or 7%. Think about that, $200,000 loan, 7% would be a $14,000 penalty. Who can withstand a business model with penalties of that nature? So that is one of Calabria's answers to all of this. And he's also stating, check this out, that he does not believe that the forbearance rate is going to go anywhere near 10, 7, 8%. Although his CFO of FHFA is saying that don't be surprised if we get to 15 to 20%. So the left arm isn't talking to the right arm. And again, this is just, in my opinion, and a lot of others' opinions, that Calabria is just pulling out excuses to not allow those reserves to be tapped into by the aggregators, the investors, the servicers, the people that truly need it, because they're going to have to pay the money. Now think about this. FHFA, Fannie, Freddie, they're getting the loans at some point anyhow. So these servicers are just doing, they're servicing the loan for Fannie and Freddie. It's going to be Fannie and Freddie's loan anyhow. So why Fannie, Freddie, Calabria is being so hard-nosed at this point to wreck the market on this end and this side of the market. So things are starting to go to the wayside, such as cash out refinances, non-owner occupied purchases. Some investors, some banks have already pulled those products back. Not all, but some. So the market is taking a serious hit as a result of this. And investors cannot sustain that business model. So there's a concern about the collapse, a liquidity issue. Those things are still some huge concerns. Now, people are still wishing to talk to Calabria. Barry Habib, I think, was in a couple days ago and was able to have a conversation with him about this. I don't know if it's going to do any good. He gives an inch when he needs to be giving a mile, right? And he thinks that he's doing the industry a favor because he has their long-term interest at heart. Again, we also, everybody in my industry wants Fannie and Freddie to come out of conservatorship. That's without even question. But at what cost? At what cost are we willing to do this and say, well, I'm not giving you any money? I mean, that's what he's saying. I know Jenny Mae, FHA, has given you guys money. But at Fannie, Freddie, we're not going to give you any money. We're not going to bail you servicers out. Now think about this. And people say, well, I wouldn't bail the servicers out either. It's not bailing the servicers out. This is a government bailout. The government, the CARES Act, is the ones who created the mess. Not the servicers, not bad loans, right? None of that. The CARES Act are the ones that created this unintended consequence. So keep that in mind before you start talking bad about the servicers. They should have enough liquidity to miss billions of dollars in payments. They shouldn't need Fannie and Freddie's house. So keep that in mind. They didn't create this mess. It's not like the subprime era. Keep that in mind, okay? All they're doing is servicing loans, and there's no way that they can shell out billions of dollars without any help when you've got Fannie and Freddie sitting with $242 billion with the B billion dollars in reserves that they could be helping these servicers out right now to get through this. And that's where we're at. That's why Mark Calabria in the mortgage industry right now doesn't have a real good name. Now, you know who has a good name with? Is people that are banking on the fact that Fannie Freddie is going to end up publicly traded again. So people that have stocks, right? People that have stocks in Fannie and Freddie's name now, of course, they don't want Fannie and Freddie to bail out the loan servicers and help the mortgage industry. Now keep this in mind, the more that the mortgage industry fails on this, what happens? It keeps constricting and restricting, which at the end of the day, it only hinders consumers and home buyers. So the trickle-down effect, it only will hinder programs, mortgage programs, home buyers, credit scores, overlays. The mortgage market constricts and makes it tougher for the consumer to get a home loan. With that said, it's Friday Coffee, the Mortgage Man Eric, 602-757-2171. We'll see you.